One of the areas that we do like, but we've been shifting, we've been doing a rotation within that area, is actually Japanese equities. We've liked the large caps for a long time. The story there has been essentially cheaper yen benefiting earnings, very much cyclical composition for the equity market, benefiting from global growth being very much intact, and also a lot of the structural corporate reforms, buybacks, dividends. If you want to, if one believes that's a driver for performance, there's been no better market than Japan for that. Now, what's happening now, sort of post kind of the the early August sort of obviously correction in the market, but at the same time the much stronger yen is we've turned perhaps sort of a bit more neutral in the broader market, but we turned a lot more constructive in the mid caps.
I want to pick up on what you just said about some of these structural reforms. There's a fascinating part of that story has been some of the M&A and what they're doing there on governance. And, one story we've been tracking very closely is Seven & I and what they've been up to. I mean, this is such a fascinating study as far as corporate culture challenges are concerned. Do you suspect that, we're going to see more of this in Japan? Or, how are you looking at the M&A space in this market?
Rather than sort of M&A specifically, this is more about, corporate reform agenda is flying high right now in Japan. We expect to see more of that. And again, importantly, we're now starting to see more of that in the mid-cap space. And that's where, we think that part of the market is very attractive, valuations are very attractive, and it's not as sensitive as perhaps the larger caps when it comes to the direction of the yen, right? So we've done a rotation from large caps more towards mid caps. We also like the banks in that space. Obviously, banks saw a big correction. It's been a favorite position for a lot of market participants. We've now sort of starting to move into the banks because inflation is broad-based in Japan. We do expect rate normalization to continue. When rates normalize, you expect banks to do well. That wasn't the case, when we saw the big correction in early August. Clearly, banks struggled a lot. But again, that was because they were kind of, it was a very well-liked position. I think a bit of that's now been shaken out. So that's another part of the Japan market that we do like.